So, who are you guys?
Yeah, my name's Reese and I'm the sales manager at Martin & Co.
My name's Leanne and I'm the mortgage advisor at Martin & Co.
And how long have you been in your positions?
Well, I actually, my actual position as a sales manager has only been a good 5 months or so. I was previously the lettings manager and I now work with both. But I've worked with Leanne since I've started here, where Leanne was originally my manager on lettings, who has now taken up a bigger role in mortgages, running that. But I mean, you don't even tell them about yourself.
I've been here 17 years.
Yeah.
I used to be the lettings manager. Many of you know me as the lettings manager. And then about 18 months ago, I qualified as a mortgage advisor, and so I've moved over to the mortgage department. And so a lot of you who are dealing with me currently do know that I obviously am very good with dealing with landlords, buy-to-lets, mortgages and that, because I can do a lot of the things that the other advisors can't do. I can even value your property for you for lettings. I know about the tenancies. Some of you are working with me to sort out your current properties and do your remortgages. So yeah, hopefully I can do better service.
And also this video is targeted towards the sales market. It's definitely a bit trying at the moment. There's a lot of things changing. Most people know we're a dedicated lettings agent, first and foremost. So you're not going to have no problems in that side. But with sales, we've got a whole roster of people and expertise to help you on that. And you probably hear so much with mortgages and how the sales market is doing, and it's keep hearing that it's going on the down at the moment. But all I can say is it's fantastic at the moment, especially in the southeast of the UK. But we'll go into that in a bit.
Perfect. So what's kind of prompted this video? What's kind of been happening in terms of sort of bank rates, things like that?
Oh, it's just everything at the moment. It's all about the economy, isn't it, right now?
It's too much, massive
Yeah,
changes.
they're saying house prices are crashing, mortgage rates are going through the ceiling, talking about the pound value dropping, bills, everywhere you look right now, it's all about people's living finances and that, and people are worried. So
obviously that's quite a big thing to be kind of worried about. That covers a lot. So specifically, what's kind of like the actual facts, kind of what is that looking like at the moment in terms of the bank?
So the bank have raised the base rate. They've done it 7 times so far, sort of since December. They're raising the base rate to tackle inflation. So I do think that they will raise it a few more times to come. When they raise the base rate, what happens with mortgages is mortgages follow over the top of the base rate line, so they go up. Things like savings accounts and that, they follow below the base line, but they don't catch up as fast as the mortgages go up. But it just means mortgages are going up, so if you are in a standard variable rate, you should really think about getting a fix if you can. Speaking to a broker, speak to me, but really speak to a broker and sort of get some advice on getting yourself into a fixed rate.
Yeah, it's absurd at the minute. I mean, with everything going on, as soon as petrol prices went up, we saw the bills, which everyone knows about. Price of just anything, we've just seen like food in supermarkets, housing, everything. But you still got people buying, and we're seeing that a lot in Southend, especially because there's a big demand to be near the coast, and we're on the train lines. So we're seeing prices just keep going up and up and up, but there's no real rhyme or reason to it, except for that we just have more demand than supply. So if you are thinking about selling or buying in the area, I can never say there's a right time to do so, but at the minute it's rife, it's great. People are certainly struggling a little bit more to buy a place, but with the right help and the right guidance to make sure that your offers are in line with it, especially if you're looking to sell property, honesty from an agency at the minute is crucial. We've found that it's easy to push the prices or be quite ambitious, whilst the market was soaring as normal. It's coming up to the winter time. People may not be buying so much, but definitely find somebody who's very trustworthy, be on the phone to you a lot of the time, because things are going to change quite a lot in the next couple of months, I'd say.
You do have some good news though in terms of sort of buying to kind of combat all this kind of doom and gloom stuff that's going on right now that's making everyone a bit worried.
Something mentioned about, so if I was looking to remortgage, is that something I should definitely do now?
Yeah, if you are ready to remortgage, you should definitely look at remortgaging into a fixed rate now, because every time the bank base rate goes up, if you're going to the standard variable rate, then your lender's going to put up the rates. So you're going to find that you feel that increase straight away, whereas if you're in a fixed rate, then that can obviously save you from going up because you're going to be in that fixed rate for a certain fixed period of time. Now, how long should you fix for? I don't know, you can get anything from sort of like a 2-year deal, fixed rate. So it's just really on what you sort of feel is going to be best for you. If you're not going to be happy with the rate you can get as a fix, then you can go for longer. You can do anything from 2 years, 5 years. So there is some even 10-year deals out there, and they're not really too bad. It's just sort of how you want to do it, because once you do fix into that rate, obviously if you do want to come out of it early, there is sort of early repayment charges to pay most of the time. So obviously that can be quite costly.
So, I mean, it's just a question now, like I've just had a thought. What if my fixed term was to finish in the next 2 months? Is there anything to do now?
Then you should look at
Just definitely look at it right now.
Deal. Yeah, you can do that 6 months before.
Alright.
Yeah, that's the really good thing, is that you can have a look 6 months before your current fixed rate ends. You can start looking around for a new rate. You can get that rate fixed in as long as you make an application at that period, and then you have 6 months to sort of complete it once you get your mortgage offer through. If your rate is going to be ending after sort of 6 months, so it's going to be going on for longer, and you're sort of worried about the amount you're going to have to pay, you can overpay your mortgage as long as you don't overpay more than 10% of your balance. You could overpay, so you could have a look at what potentially could you be paying on your next mortgage and start to overpay that now. So that way you'll be reducing your balance, but also you'll be practicing for the new amount that you're going to be paying when your fixed rate does come to an end. You just need to let your lender know if you do want to start making overpayments each month, because most of the time if they receive a higher payment, they just reduce your next month's payment, and then you wouldn't benefit from that. So you just need to make sure your lender knows that you're making those payments to do some overpayments.
So, ladies and gents, tell me about stamp duty.
Stamp duty. Yeah, so this is the bright, shiny piece of news that came in, especially with everything going on. So essentially, for first-time buyers, they're still in the clear a little bit more, but for properties, well, up to $425,000 for a first-time buyer, you're not having to worry about it. And for any person buying their second home, so this is not, unfortunately for investors, you still got to pay. Outside of London, it jumped from $125,000 to $250,000. So considering the average family home is around 325 in the South End area, if it's your second home going from a flat, you're going to be saving yourself, well, it would be £6,000 typically before for stamp duty. Now you're looking at $2,250, which is a massive cut on top of all the other expenses we're having to pay out for the minute. But yeah, in London, which we don't deal with, but it's always good to know, you're looking up to $425,000 stamp duty free, and then between the 425 to 625, you're on a 5%. It's just a bit of help from the government just to see people push through a little bit more to get themselves on the ladder before we, potentially the market is to drop. So if you're looking to sell in the area, this is a massive boost. It's going to allow people to give a bit more confidence to go out there and buy something, and speak to their mortgage advisors, speak to Leanne if you want to see what you could be achieving, and then you can take that price, that amount off your purchase essentially.
So in sort of both your professional opinions, how has it been for first time buyers? The ones that you've engaged with, the ones that have sought out help already?
I mean, Leanne sees it on the first part. I don't get to see a lot of background stuff, a lot of our first time buyers, but they've just dominated the market. They're the ones that have really pushed it in the direction it was. If it wasn't for the amount of first time buyers entering the market, because we did see a lot of originally investors selling up. due to what happened during COVID. Investments were not so much a viable way to make money. But yeah, the first time buyers have really snapped that up, and we've just seen prices rise because of it. It's not to put anybody off, because I think, especially in Southend, being now a city and there's a lot of plans for the area, we'll continue to see those prices rise, even if we see a drop in the short term. In the long term, we're going to see it come right up. But I mean, Leanne has a bit more information on the mortgage side.
Yeah, I mean, first-time buyers, they're still looking. People are finding it harder to sort of get that initial deposit together. There are still some sort of 95% loan-to-value deals. It's just to get those deals, you really need to make sure that you have sort of perfect credit history, because it's kind of like, if you want to go for a 95% loan-to-value deal, it's really got to be affordable to you. It's going to be almost like you don't even need the money. Because what can happen is, obviously, when you start off looking for like a 95% loan-to-value deal, let's say there was something on your credit file, something didn't quite make sense, an address was wrong, something like that. It might mean that the lender comes back and they say, I'm sorry, we won't do 95% for you, but we'll do 85%. So you really do have to be almost perfect to get the 95% loan-to-value deals. But a lot of the time, the 85% will be offered as like a 15% deposit. But it is just obviously making sure that you have got those deposit funds and that you are aware of the costs, because first time buyers, if you haven't also lived at a property, just got to make sure that you are aware of the other costs associated with going to be living on your own, such as your utility bills and that. But yeah, it's there is a lot of first time buyers still coming for mortgages, so it's really good.
Do you sort of have any sort of saving tips, money tips, that kind of thing, in terms of people looking to kind of get on with a mortgage?
Yeah, I mean, besides buying a new kettle, I'm sure you saw that.
It's really hard to tell people how to save more, really, because you know, it is just people's habits and that. But I do think the more sort of like with the increases to the bank rates, that people are gonna just start to do it naturally. They're going to be sort of cutting out those takeaways, cutting out those extra coffees and that. Spending's going to come down, the savings going to go up. So I think people are going to be encouraged more to sort of put their money away and save their money. But the thing is, if you want to buy, if buying's right for you now, buy now. If buying's not right for you now, don't buy now. It's when it's right for you is the right time to buy, because everything balances out anyway. So if mortgage rates go up, property prices come down a little bit, you're going to buy your property at a lower rate but pay a higher mortgage. If you're going to buy when the house prices are up, the mortgage rates are down, you're going to be buying your property at a higher rate but paying a lower mortgage. It all just balances out together, and that's the whole idea of why they're moving the base rate, is to try and make everything balance out, because it has all come out of sync. So it's just trying to get that all back under control and that's what raising the base rate does.